Justin Wolfers is Professor of Public Policy and Economics at the University of Michigan. So just in terms, just to follow on from what David was saying there, I mean, you have a situation whereby both the US and Iran are vying for control over the Strait of Hormuz. You have commercial shipping vessels having to really assess the damage and the sort of dangers, rather, of traveling through the strait. A lot of people are going to think it's not worth it. We don't necessarily know if the US can actually have any control over the Strait of Hormuz or charge these tolls or keep ships safe. I mean, all of that is up in the air at this point. In the meantime, where do you see oil prices headed, Justin?
Well, really the question is, how long does the strait stay closed for? And is it closed? Like, you know, you wake up one day, it's open. You wake up the next day, it's closed, open, closed. It's sort of like my dog likes to come into my house and out of my house, so I'm always opening and closing the door. That feels like the Strait of Hormuz right now. But he's a good dog. The real problem, though, this is serious, Zane. You know, the real problem is if people can't be sure that the door's going to remain open, they're not going to be willing to send ships up. And so the longer that we get these supply disruptions, the more we're going to see oil start to shoot back up towards $100 again. So look, a couple of things are true at the same time. Oil's not as high as it was, so things got better. But when I say things got better, oil is definitely a lot higher than it would have been if we hadn't have gone to war with Iran. And if things continue to worsen, if there's more escalation, you can expect oil prices to go back up again.
But we're still a lot lower than the highs we really saw, over $100 a barrel, right when the war started. Explain that to us.
Well, I think the fear there was far greater. So actually, there's several issues there going on. One, there's a timing issue, which is if you need oil today, the oil has to have left the Middle East several weeks ago. And so just if there's not much oil right now, there's not much going on. So what I tend to do instead is look at futures prices, which smooth through that. And they still do show exactly what you just said, Zane, which is oil markets feel better about where things are now than when they were at the worst of the worst. Now, right there's the answer for you. When things were even more dramatic, when it looked like we might take out some of the local oil capacity, whether it was shipping or extraction, when it was on the table that you might get further damage through the region and so on, then of course markets gasp. They're like, oh my goodness, could this get much worse? Many of those worst case scenarios still remain a possibility. They've just become something less of a probability.
When it comes to China, I mean, China does have a lot of power over the oil. I mean, I think through this story, we've learned so much about how much oil, just in terms of the stockpile of oil that China is really sitting on. They are the world's largest importer of oil. They have also a lot of oil saved up. They can affect oil prices depending on how much they choose to buy right now, Justin.
Yes. And so far, actually, China's played something of a constructive role, choosing to pull back on their purchases of oil, which has meant there's more for the rest of us to go around. That was a moment of kindness, and you can't expect these moments of kindness to continue forever. The reality of the world oil market is it's an unusually sensitive market, and it's for a very simple reason, which is basically people need oil. And if there's less oil to go around, then in order to get people to pull back, the price would have to go up an enormous amount for people, for instance, to stop driving to work. And so if any country were to pull back on its production of oil, the United States, or if China were to pull back on its demand, or if we've seen this with the OPEC oil shocks in the 1970s, and subsequently, if any of the Middle East countries were to pull back on how much they were willing to send into the world market, that has very, very dramatic effects.
And just in terms of the United States, I mean, this is something that we've tackled quite a bit on this show, but just if you could explain this to our international audience, the United States is the world's largest oil producer. Only about 8% or so of the oil that is imported comes from the Middle East. But the energy market across the world is so interconnected that there are dramatic effects of the closure of the Strait of Hormuz on oil prices in this country, where you and I are in the United States. Explain that dynamic to our international audience.
Yeah, it can definitely break your brain a bit if you haven't studied international economics. So let me just give you a very simple way of thinking about it, which is, let's say, Zane, that you happen to own an oil drilling company in Texas. Today, you've got the option of selling it to someone in Europe for $74. That's what the global price currently is. As a result of that, you're not going to sell it to an American for $60. In fact, you're going to demand that the American offers a price nearly as much as you could get in Europe. Now, the reason Europeans are willing to pay $74 for oil right now is there's not much oil over there, which is a long way of saying the price of oil is set in global markets. So the American price depends on what happens to global supply and global demand. The second thing that can break your brain is that America basically produces as much oil as it consumes. And so you might think, well, if the price went up, America as a whole, it makes a bunch, it uses a bunch, seems like that would come out on average. And actually, for the country as a whole, that's true. But it doesn't feel that way. And it doesn't feel that way because what happens is when the gas price is higher, costs me more money to fill up at the tank. But the folks who hold stock in oil companies, those oil companies are now selling it for a whole lot more, and they're a whole lot more profitable. On aggregate, they offset, but at the level of the individual household, it can feel pretty painful.
Yeah, you can say that again. Justin Wolfers, live for us there. Thank you so much. Always good to see you.